I am currently looking at a new potential real estate market to invest in as a passive investor. And what I want to do for you today is give you my top 5 market factors that I look at when evaluating real estate markets to see if I even want to pursue any deal within that market. But before we go ahead and dive in, I want to welcome you to my channel, The Passive Income Therapist. My name is Wayne, and in my channel, I dive in all through the ins and outs regarding private real estate, but specifically the world of real estate syndication. So I want to welcome you to the channel, but let's go ahead and dive in. So the number one factor that I look at when evaluating a new real estate market is population growth. So what you can look at is over time within the last 5 years or so to see that trajectory, but also look to see where the population growth is expected to go in the future. Now with COVID, we had a huge amount of people that were migrating from certain areas to another area, but what you want to look at is to see the overall average population growth in that market over the last, say, 5 or 10 years. But you also want to consider any sort of other factors that could have played a role in that population growth, including the time of the COVID crisis. Number 2 is job growth. I'm going to piggyback off of what I said in number 1 with population growth, but I also want to see that there is job growth along as population growth is increasing, because if you're having more people move into a certain market, you want to make sure there's going to be jobs available to help grow that market, and also people are going to have enough money to be able to invest in their place that they're living, and making sure you're not going to run into a situation where the areas are having more people move into those areas, but there's not job opportunity. Number 3 is job diversity. Of course, I just went over job growth, how that would be important, but I want to put an example for you to illustrate what I'm talking about with job diversity. So when you are investing in stocks, real estate, crypto, etc., you aren't usually going to put all your eggs in one basket where, say, 100% of the amount that you are investing, you're going to put in one specific thing. Usually you're going to diversify. That's how I want you to look at when you're looking at job diversity, in the sense that if you have one sector of jobs that are primarily in that market, say for manufacturing, and for over time, for some reason, what happens, the manufacturer or the biggest manufacturer in that market pulls out of that market and moves, a lot of those people are going to either lose their job or move to wherever that manufacturer is then going. So I want you to really look at the job diversity to make sure you have not just one company or sector that's primarily the bread and butter of the market, so to speak, to make sure you have a diversified amount of jobs available for people. Number 4 is rent growth. I'm going to piggyback off of what I just said in number 1 through 3, but what I want you to factor in is looking at the average rate of rent growth over the last several years, maybe in the last 10 years, and projected the next 10 years. But when I'm talking about the first 3 bullet points that I just went through, is that you want to look to see if there's going to be a demand in your market for housing and the types of properties that you are looking at. Because when people are moving into your market and they're going to have better jobs, most of the time they're going to be able to afford better places to live. So when you are investing in these properties and rehabbing properties to appreciate those, they're going to be more likely to be able to afford the places that you are offering for them to live. And number 5 is absorption ratio. A lot of people don't tend to have this in their top 5, but why I want to include this in my top 5 is that you are having to look at the supply and demand in your market. So particularly if you are looking at apartment buildings in this specific market, you want to look at where the demand is right now, including the vacancy rates, and I'll include that in this, but you want to look at where the supply is in the market versus the demand, as well as where are the units that are going to be coming in to development in the future. So for example, in the market that I'm looking at right now, there isn't any plans on building and developing new units to come onto market within the next 3 years. So what happens is that, of course, if supply is less or even halted, the demand is most likely going to stay there because there are not any new units coming into the market for people then to go and live in and to compare. So those are my top 5 real estate factors to look at when evaluating a new real estate market to see if you potentially want to invest in, just like I did. Now, if you have a different top 5 that you think should be up there, let me know in the comments, but I'd love to hear your thoughts on this video and seeing what you would do as a new prospective passive investor in a new real estate market. So my name is Wayne, the Passive Income Therapist, and I will see you in the next video.